Shares of wealth management platform provider Envestnet are up over 100% year to date. Here to talk about the company and its success is its president, Bill Crager. Welcome, Bill.
Greg, good to be here.
All right, before we get started and get into the details of your company, what is it exactly that Envestnet does?
Envestnet is a combination of a wealth management platform, so that's software, back office services, and things that enable a financial advisor to deliver advice to their clients, as well as an asset management company. So we're actually creating portfolio and investment strategies that the advisor is then delivering on to their end investors. So really what we're serving is the financial advisor with technology, back office, and investment product.
And you also compete with financial advisors like Morgan Stanley or Charles Schwab because you have assets under management. You have about 400 billion assets under management,
right,
up from 100 billion about 3 years ago. So you're growing quite quickly.
Right.
Now, are these assets coming from advisors who break away from the big shops?
So we serve what we would call the independent financial advisor, and that's the advisor who doesn't work for Bank of America Merrill Lynch, for Morgan Stanley, for UBS, and for Wells Fargo. But the rest of the marketplace is really the marketplace that Envestnet serves. So it's the banks, it is the independent broker-dealers, it is the RIAs that you find on Main Street. So we're helping those financial advisors compete against the most capitalized firms on Wall Street, like a Morgan Stanley, and we're helping them compete. And what you're seeing in the industry is you're finding that advisors are leaving the captive environment where they've worked for the bigger brand name firms, and now with the infrastructure, the technology, the services that a firm like Envestnet provides, they can go independent and compete.
And why have you found that more advisors are going it alone? They're leaving Smith Barney or the big shops or the Merrill Lynch Thundering Herd. Why do they want to go it alone now and use your services?
Well, I think a lot's changed over the last decade, right? So a decade ago, Merrill Lynch or Morgan Stanley had access to all the investment product, had the pricing on their end, had all the back office infrastructure. A decade later, the technology has advanced incredibly, so the advisor can compete and have the same sort of infrastructure, do it at the same cost level, and the power of the brand has really changed where the end consumer, the investor, may be more comfortable with a local personality like Bill Crager Asset Management versus maybe Morgan Stanley, given what's happened over the last decade.
And recently in the spring you bought Prudential Wealth Management Solutions.
Yes.
So what does this mean for you in the second half?
Yeah, well, the business, Prudential had a business that was focused on providing infrastructure, so technology for bank trust officers, investment product, back office to the bank channel, bank trust channel. So they work with large institutional banks. So this gives Envestnet a bridge into that bank channel. So we see growth going forward, serving larger banks who have both a trust group and then a branch set and then a high net worth group and maybe a retail group, pulling those pieces together for the bank. And so we see a real growth opportunity there. And I think ultimately we bring that business over in July, more at a break-even rate. But as we work through the integration and go forward, our plan going forward, it should be very accretive to our financials.
Now you said individual investors are more comfortable with independent reps nowadays. Are they more comfortable with the technology in the system? Now, they suffered from the flash crash,
right,
and they're worried about things that happen at Knight Capital, for example. So are you seeing that individual investors are comfortable with the technology in the system? Because we keep hearing that they're afraid to get back in. They're afraid to join this rally we're seeing, partly because of the technology involved.
Right.
What do you find?
Well, I think, you know, unfortunate circumstance, whether it was Knight or whether the flash crash or some of the other...
Or high-frequency trading is a big thing nowadays, scaring people away.
So, you know, if you're a retail investor, that's very intimidating. What we have done is we've enabled that financial advisor to bring practical technologies to the end investor so that on a daily basis they can see how they're performing, how their portfolio is doing. They can check the news that's related to their portfolios. They can monitor all the different activities that are going on in their account. So what we're creating for that end investor is transparency so they can see what the dynamics are in their investment strategies and portfolios. So we're enabling a look into their investments that they never had before. And just the evolution of technology, it's everywhere, it's ubiquitous. You know, we see where the investor will become more and more attached to that level of information and transacting their investment strategies for the long term through technology conduit in combination with the person that they like to meet with, who's their financial advisor. So it's that complementary sort of dynamic that we see evolving. I think overall the confidence in the market is increasing. We're seeing in 2013, tremendous growth in our core business. So advisors are doing more business with their end clients, and that's been one of the reasons that Envestnet has had a very successful year.
All right, thanks a lot, Bill.
Great, good to meet you, Greg.
And thank you for watching The Street.